Hey everyone, me Kevin here. We need to do a deep dive on what Rivian just told us today. We've got to talk. Of course, this video is brought to you by the programs on building your wealth down below with a coupon code expiring at the end of Christmas Day. Take advantage of that before the price goes up again. All right, folks, let's get into what's going on here with Rivian. So, Rivian delivered 386 vehicles through December 15th. Almost all of those were delivered to employees, all except 11. 11 R1Ts were delivered to actual customers, and 2 R1Ss, which is the SUV compared to the truck, were delivered to customers. Rivian apparently produced 652 vehicles in total. They did only deliver 386 of those, so we do expect deliveries to ramp up here. Nonetheless, the production target of 1,200 R1Ts and 25 R1Ss will be missed. That is, Rivian production will be less than 1,200 units for 2021. Reason for that being cited are supply chain issues. No surprise here. They suggest that the supply chain issues they're facing are not long-term issues. But the problem is they have this issue of, hey, we could have 99.9% of the parts. But if we're just missing 0.1% of the parts, we can't finish building the vehicles. They're blaming a lot of the shortages, after having read the earnings call, on smaller manufacturers who are providing them parts, who don't necessarily have the bandwidth or capacity during COVID to add a second or third shift, which means they're not able to deliver these minor parts that are needed. And without those components, the production lines shut down. There are rumors, and I want to make this crystal clear, this is just a rumor, but there are rumors that production lines at Rivian do shut down multiple times per day. This was not brought up in the earnings call, so going back to what was stated in the earnings call, back in the earnings call, we did have executives try to make it very clear that they are at the start of an S-curve, and that production is slow at the beginning of an S-curve, and they're not wrong. Just for clarity's sake, because not everybody might be familiar with an S-curve. An S-curve is something that is very frequently referenced when you're a startup, especially if you're a manufacturing startup. So an S-curve of production is essentially a two-folded version of exponential lines. So the goal is that you grow very slowly, but then that growth starts compounding, and then you grow exponentially. That might be a little bit too vertical here. Probably look a little bit more like, there we go. Probably look a little bit more like this. And then at some point you kind of reach an inflection point and that S is off, so your production starts growing less per year. So this is the phase over here where you might have high percentage returns in terms of, oh my gosh, we did 1,200 cars in 2021 and we did 10,000 in 2022. We grew 800% or whatever, right? This is where you get those ridiculous percentage returns, which you should not look at for a starting company. You should look at actual cash flow, free cash flow, and are they running a profitable shop? Are their margins going up, right? Money-losing companies in this market are very dangerous. I've been talking about money-losing companies being the biggest target for sellers and short sellers probably for about 6 to 10 weeks now. And Jim Cramer just today did a piece about how you should sell money-losing companies, which I think is interesting that he's telling you that after everything's already fallen and discounted substantially. But whatever. And then of course over here, this is where you would expect to see those 100% sorts of gains where it's like, oh wow, we're doubling, or more than doubling, right? That's your exponential growth. And then your growth slows. Your growth goes back to, oh, okay, we're growing at 20% a year, or we're growing at 15% a year, 4% a year, whatever, right? Goes down. Obviously, this is where your multiple is generally infinite when you do a PE multiple calculation for these, which we'll do later for Rivian. In 2025, we're probably still going to be relatively early if Rivian survives until then, which it's worth noting that companies do not have to survive. Okay, that is very important to remember. But say Rivian does survive, which I expect it probably will, unless its product's just horrible, which I don't think. But say they survive, by 2025, we expect their forward multiple probably still to be 300 here, and then maybe you go to 100, and then when you hit that inflection point, this is where you start going to like 50, 35, right? And that's how your multiple starts compressing as your growth goes down. This obviously makes sense. Okay, good. So let's talk a little bit more about Rivian and what we learned today. So we know that we missed production numbers. We know that in the after hours, Rivian is down about 8%. So we can see the chart for Rivian right here. Earnings were today. So this is the after hours action here, which if we just zoom over here, we'll see that we closed at right about 108, 109. and we did drop to a low of about 95, sitting at roughly 99.30 right now is where we're sitting, so just shy of $100 a share. So now, other things to note is that, well, a big one here is that Rivian said Thursday that they're going to start delivering the first prime Rivian vans to Amazon this month. This is really important. This is a critical milestone. We also don't expect that employees or Amazon are going to be complainers about the initial deliveries of these vehicles. That is because both employees, who are likely paid at least in some part in stock, and Amazon, which owns a substantial portion, I think in excess of somewhere around a 20% stake, and those numbers can fluctuate given that now we're on the market, and it's not entirely clear if Amazon was able to sell on the IPO or if they're subject to lockups. I imagine a lot of their shares are subject to lockup. Either way, Amazon has a substantial stake in Rivian, and we don't expect that employees or Amazon are going to complain about the product. So probably not expecting any negative headwind from employee deliveries or Amazon. The most important ones are going to be those initial customer deliveries. And probably kind of like with Lucid, what you want to watch for are initial problems, like do these things burst into flames, right? Did somebody get into an accident with it and get severely injured? Those are really, really important and super critical when a company starts. So do pay attention to that news cycle, though if you look at a company like Lucid, we haven't actually had those issues, which, knock on wood, you don't want those sorts of issues. Certainly you don't want anybody getting hurt. Now, Rivian is also prioritizing the Amazon van project over its consumer models. So they're using this, and this was reported back in October, so we already kind of knew this. Again, not a surprise, because you're going to have probably a less complaining customer or a more understanding customer over at Amazon than consumers who are going to expect perfection, and you're the 20th car off the line. Well, for consumers, that's going to be a high bar, right? Anyway, it is worth noting that both of the R1 models, the truck and the SUV, had reservations at the end of October of about 55,400. We're now at 71,000 reservations. We did have some negative news in this last quarter that Ford ended their partnership with their plan to build a joint vehicle with Rivian. This is probably not necessarily a horrible thing. Ford's making its own electric pickup truck. We've got Rivian making their own electric truck. I'm not sure they really need each other. Ford has its proprietary skateboard for their pickup truck, so whatever. Now, what I want to do, though, is talk about a big red flag that I see. And it's pretty important, and we're going to talk about this red flag, and then we're going to look at some notes as well from the earnings call. We might look at the notes from the earnings call first, but I really want to talk about this red flag. But before I do, I just want to do a quick 20-second shout out here. Thank you to Masterworks for sponsoring this video. Check the link to them in the description down below. Remember that Masterworks allows retail investors to buy fractional shares in high-end art. It has almost all of today's most popular artists, like Banksy included, and since you can buy fractional shares in modern art, you can invest in multi-million-dollar pieces of artwork for as little as $20. Now, traditionally, the only way to actually invest in these sorts of pieces was if you were rich. Well, now you can invest in essentially fractional shares, and you can sell those shares on the secondary market that Masterworks has as well for art, or just wait until they end up reselling the actual investment. Now, it's also worth noting that art, by some measures, has actually outpaced the S&P 500 substantially for the last many years. And so do consider Masterworks in some of your investments. Check that link out down below. And thanks, Masterworks, for sponsoring this. Okay, so let's look at the earnings call. And then I want to talk about the red flag. The earnings call does contain a reference to this red flag. So for the time being, we're just going to skip over that. I just want to highlight a few things here that are worth noting as a Rivian investor. And then we're going to keep going here. So we know that Motor Trends named the R1T, the truck, a motor vehicle of the year. Personally, I don't really care about these sorts of awards. I don't care. What matters to me is consumers buying the product. That is the ultimate selling feature for me. It's also worth noting that in early 2022, they plan to complete the certification of their electric delivery vehicle 500, which is narrower and shorter than their 700. But their goal right now, their priority, is to get the R1T, the truck, the SUV, and the 700 for sale this year. Worth noting that they're already working on developing essentially their second line and getting that certified for the electric delivery vehicle. I do get a little bit concerned. This is not the red flag I want to talk about, but it's something that I do consider. I do get concerned if too quickly you start thinking about so many different lines of vehicles that you could, especially at one manufacturing plant that they have right now, you could really spread yourself too thin. That is probably one of the biggest issues for companies, in my opinion, is that they hire too quickly and they try to grow too quickly, and it's a really good way to go bankrupt. Again, I'm not suggesting that I think Rivian is at risk of going bankrupt, but this is something that I do want to pay attention to. It's something that does make me nervous. Now, it's possible that we're pulling a Tesla approach here, and we're going to use a lot of the same parts. Now, this is the motor trend video on the R1T, and one of the things that I have to say I appreciate so far, at least from the research that I can do from a desk, is that it does appear that the R1T, along with the R1S, the SUV in the truck, do use substantially similar interiors. Oh, and I love that they actually have a coat hook in the back of the chairs, unlike the Teslas. But anyway, substantially similar interiors. This is very important, so that way you're using consistent parts. You're still going to have substantially different exteriors on these vehicles, but the more you can standardize the parts on the inside, the better. Very, very important to keep that margin up, and that's going to be something critical for valuing Rivian as we go forward. So what else can we glean from the earnings call? Well, we find out that they do not believe that their supply chain issues are going to represent long-term issues. We're going to, it's worth noting that for their Georgia factory, they expect to eventually get to a target capacity of 400,000 units there, and I believe 200,000 is the goal for their Normal, Illinois facility, which they have open now per year. Keep in mind, this is going to take a while to ramp. I would guess for a new factory that they open up in 2024, which is the estimate, barring delays, probably take 5 years to get to a full ramp there. I mean, even if you did it in 3, that'd be very impressive. That's just a note about them having delivered their first 11 vehicles. Second plant, we'll talk a little bit more about this in just a moment. Here's the 99% argument with the supply shortages, so no real surprise here. We do get a comment that this was quite interesting, that close to 90% of the customers for the R1T have never owned a truck. And that was very interesting. And the vast majority have never owned an electric vehicle. So that was quite an interesting comment that came from here. The vast majority have not owned an electric vehicle, and 90% have never owned a truck. So they're really appealing to potentially this new audience, which I'm not sure if that's good or bad, that maybe you're not converting truck enthusiasts, but it is always good to open up your market. The Amazon deliveries, they do expect that to come out this month, and they're going to ship that with the Fleet OS. And that is one of their big selling features, which they'll be charging for on sort of a monthly subscription basis after an initial trial period. So I think you get 1 year free connectivity with them. Okay, so this is the earnings call. Now keep in mind, anytime you look at the investor presentation, these sorts of pamphlets that they hand you in the shareholder letters and all this, this is designed to be marketing, right? This is designed to get people excited about a company or brand. And I generally recommend being very skeptical when you read this. One of the things I wrote down over here, which actually spawned my thought process, was, okay, so if you have 10,000 plus employees as of December 15th, that means if you pay all of them an average of 50K plus stock-based comp is obviously dilutive, but let's just say 50K, that's $500 million a year. You're spending $40 million a month in employees. Your burn is something to consider. Now, $40 million a month for a company that just burned over 1.3 billion in a quarter is a drop in the bucket. So the employees are not going to be your main cost driver here. But there are going to be some other things that are cost drivers. Okay, so there are a few things written down here on the balance sheet that I want to talk about. First, it's worth noting on their first introduction to the market, essentially to public markets, they raised $11.9 billion via an IPO. The company's worth about $92 billion right now. They raised 11.9 via IPO. This is great. This is your first hurrah. This is when we get the excitement. The thing goes to the moon, and then the momentum dies, and it falls back down. We're down from 170 back to $98 or $99 where we sit right now. About a $93 billion market cap, excuse me. Something that I do think is going to be a headwind, in addition to the headwind that we got today, which was missed production. Keep in mind, we're going to miss production in other quarters. These supply chain issues that we're facing, we're going to face until probably the beginning of 2023 when things really start getting a lot more relaxed. It's still going to be tight in 2022. So I do expect probably for the 4 quarters of 2022, production to be honestly a nightmare. It's going to be so annoying, and people are going to be so frustrated with Rivian. And the same would be true for even Lucid. And this is very, very normal. The beginning of the S-curve is a nightmarish. And if you're going to be an investor in Rivian, you really got to have the cojones to hodl through that. It's going to be hard. But anyway, right now, one of the things that concerns me a little bit is after their $11.9 billion raise, we're only sitting on $5.1 billion of cash. Now, I understand they use some of the money to expand their PPE, which is their property, plant, equipment. They use some of the money to purchase more consumables, presumably these current assets that they have here. Well, I mean, you use your money when you're running a business, right? But the problem is, how much they're burning, because they're trying to build out their sales centers. They're looking at other real estate for expanding their charging network. They've got so many candles burning at the same time. It's sales, it's the charging network, it's the advertising platform, it's actually the manufacturing and the hiring and the training and the supply chain relationships, finding different vendors when certain ones don't work out for certain portions of the assembly process. Switching vendors is a nightmare. It's a disaster. Everything takes longer than you expect. Anyway, when you put all of this together, you're in a situation where, okay, cool, we've got $5.1 billion on the balance sheet. But wait a minute, we're burning 1.3 at the moment per quarter. If you burn 1.3 per quarter, then you just do a simple 5.1 divided by 1.3, and you start realizing, y'all not gonna make it 4 quarters. You're not gonna make it through 2022 without having to raise money. And that's fine. We expect the company to raise money. It's just that's going to be another headwind, which is a problem because when a stock starts going down, here's what happens. When a stock starts going down, so I'm going to say starts fall, right? Okay, stock starts its fall, traders exit, then the companies try to do a fundraise. Now you get hodlers who exit because they see the price fall because of the dilutive nature of raising money. You're introducing more share supply to the market, so stock price tends to go down. Even though you're just basically creating more shares, but you're giving people more cash, you still have some form of a market dilution that occurs. And so that's where you get some hodl folks who exit. And in my opinion, that's usually the time you want to buy, is when the traders are gone, the euphoria is gone, the hodlers exit. And that potentially, for me, is going to look a lot like this. We're going to get a miss here on Q3. Let's call for, probably, a miss when they report their Q4, but we're already kind of pricing that in. But then we would be looking at forecast for Q1 when this comes out, because that'll probably come out in February or March or whatever. And so if we miss, guidance for Q1, then we'll have a double miss. And I would guess before March, the company's probably going to want to do a raise. In fact, if I were this company, I would actually want to do a raise before they report a potential miss for Q4. So I probably want to do a raise over here in like January or February. And the reason for that is I want to raise money while the stock price is still higher. Obviously, it's easier to raise more money when the stock price is higher, and then potentially report bad news. So that way you've raised your money at that higher valuation, and then if the stock price sells more, that sells off more. Fine, it just creates a buying opportunity. So for me, I probably want to try to get in after a raise and maybe after the next set of bad news, because we know, here's what we know with certainty. We know this company's not going to, $5.1 billion is not going to cut it. Because in addition to them having a cash burn of $1.3 billion right now, they also want to build a $5 billion factory. And even though you could get financing, it's not like buying a house where you're going to put 20% down. Construction financing sucks. You're probably going to have to burn a few $1 billion just to try to get this thing started. To acquire the land is going to cost you money up front. I don't know if you're going to be able to get financing on that until it's actually been improved. Certainly wouldn't get as desirable financing until it's actually been improved. So maybe you can get a construction loan, but those are at least 50% down in many of these cases. Sure, you can get incentives. This is going to help. Fort Worth offered them $440 million, so we're expecting that Georgia probably offered them more money, but it's not like the state's just gonna fork that over up front. Usually they just give you tax breaks or some form of credit once you make progress, right? So my guess is if they're trying to break ground in mid-2022 on their Georgia facility, they're gonna have to raise money. possibly multiple times in the first half of 2022. So I do think you have more headwinds than you do have positive catalysts for Rivian right now. And one of the things that concerns me is that they're even trying to do this other facility. Now, I know it's exciting and it's sexy to announce another facility, but you won't believe it, but they actually asked that same question in the earnings call, and I thought it was brilliant when I saw it. Oh, it's actually right here. Look at this. One question. On capacity expansion, this is an analyst who's saying this, right? I thought the idea was to ramp up Normal, that's Normal, Illinois plant, ramp that up first to see if everything works and what doesn't work, and then use those learnings to optimize a selection in the architecture of your second plant. So why expand so soon if you're still learning? And their response was, this is a key element of how we've thought about cascading the programs and how we architected the product development organization to be capable of not only running more than one program and launching more products at once, but also have those feedback loops between the different programs. Listen, they said nothing. That whole paragraph was bullcrap. Okay, then they talk about, hey, you know, we're learning things about the van, and then they say here, the last line, let me just read the last line here. You can pause it here if you want to read the whole thing. But we'll certainly learn from what we're doing now on the R1 platform and where we're doing the RCV platform, and recognizing that those programs fully develop and then launch. What you see in terms of the second facility in Georgia, this is really key for us for an expansion point of view, in the timescales associated bringing the plant online really require us to, despite that, work, as you heard earlier, or whatever. Like, honestly, like, I don't know if the transcription was messed up, but I didn't really get an answer there. I got like a total misdirection on like, oh, well, we know what we're doing. Unidentified participant here, just as a follow-up with feedback on earlier bills that you've been delivering, what's going on, where there's issues and how you've been addressing them. You know, this is vehicle quality when you first invite customers, right? And this is why they tend to give these vehicles to friends and family and employees, right? But they didn't really give us any kind of answers on other issues that they're having there. They kind of punted on that one as well. So it's when I get these kind of punty answers that I do get nervous that they haven't really fully thought it out either. I think, honestly, this $5.1 billion is burning a hole in their pocket, and they're like, oh my gosh, let's just go do another factory. Yeah. Then we can have more potential production, which makes sense because, you know, people value companies on future potential. I mean, it's one of the first things they put over here in their investor presentation. But I have to be really real here. I'm concerned that you're going to have more headwinds for this company substantially in the first half of 2022. And if they run, let's just go through a worst case scenario here. Let's say they miss their Q1 production goals because they announced that they're behind as well at the beginning of the year, and they just keep missing. So the stock goes down to, say, $50, okay, just as an example. Say it's now a $50 billion company. Okay, well, it's still decent valuation. I mean, that's like a Lucid. You could still raise money. They're going to be able to raise capital. So I'm not really worried about their ability to raise cash. I think they're going to be okay. I think hodlers are not going to love all the cash raising that's going on, but they're going to raise cash like crazy. I think the bigger concern I have is that even though they have the capacity to raise cash, they're not going to go bankrupt unless the stock goes down under $20 and it becomes impossible for them to raise money. That would be checkmate. That's when you turn into like a Canoe. I hate to say it, but I have big concerns for Canoe because how are they going to raise capital? The thing just keeps getting cheaper and cheaper and cheaper. But as an investor here, you got to ask yourself: do you want to hold through that now? Or do you wait until the company's actually proven that in Normal, Illinois, they're able to produce vehicles at a decent margin? And remember, folks, even though they're trying to get out, you know, maybe 800 vehicles this year, and maybe they're going to try to get 20,000 out next year or whatever. Look at a company like NIO, who partnered with an existing Chinese manufacturer to manufacture vehicles. In 2019, they got 20,000 vehicles out. In 2020, they got 40,000 vehicles out. Now we're finally in 2021 at a place where they're delivering, on average probably 8,000 vehicles, because they did have a 1 month where they were shut down, had a really terrible delivery month. I think that was October. But ramping is relatively slow. This is 3 years, and you're going from 20 to 40 to what, maybe 80, 90, 100 maybe. Hopefully they break 100,000 this year. Here you go. NIO delivered about 80,940 vehicles in 2021 so far as of December 1st. So say they deliver another 11,000 here, we'll be at like 91,000 or something like that, which is fine. That's fine growth. Don't get me wrong. I love that. But it's still a little bit of an issue, because look at this, folks. 20 to 43 to 90, kind of slow, right? And that's NIO, who's partnering with somebody else for manufacturing that already has the manufacturing prowess and skills. So if we now jump on over to a spreadsheet on Rivian, and let's say we're really generous. Let's say they can do 25,000 in 2022, and then they double it, and they do basically a NIO style ramp, 50 to 100, and then they get to 160. We'll modify this a little bit, okay? 160 at a $50,000 revenue per vehicle. Now, the lifetime revenue per vehicle is expected to be somewhere around 66,000, but they're not going to get that right away. That's lifetime with charging and all that. So I'm just going to discount that out. I'm taking that out, and I'm going to go ahead and run them with a 25% gross profit margin, which I think is very, very generous. It took NIO years to get to this, but let's say they, okay, by 2025 we get to 25% gross profit. After taxes and all of this, using a 300 forward PE ratio, we're maybe at about a price of 163 here, right? But watch how quickly this could get destroyed. If their expense on sales or their gross profit goes down by about 5%, so their expense on sales rather than being 75% is 80%, then the stock price literally falls by 2/3. Like that margin is critical. And so that's why, because margin is so critical, I question a little bit the wisdom of building another factory before you've actually really ramped up your Normal, Illinois plant. And not only have you not ramped up your Normal, Illinois plant, but you're trying to do 2 different styles of electric delivery vehicles, an SUV and a truck, 4 different vehicles out of 1 plant. Remember, Tesla started with the Model S, and then they did the Model X years later, right? These things concern me. I love Rivian. I think it's a sexy car. I think the company has a lot of potential, but it also has a lot of headwinds. So I'm nervous. I'm not invested in Rivian. I want to be invested in Rivian, but I think I've made clear in this video where I would invest and where I wouldn't. So anyway, these are my thoughts on Rivian. Hopefully this was helpful to you. And folks, we'll see you in the next one. Thanks so much for watching. If you liked my perspective, check out my programs on building your wealth linked down below. Thanks. Bye.